Well, good morning there, ladies and gents. Good afternoon, or good evening, depending on where you're from. This is Kurt Frankenberg. I'm the founder of RadioActive Trading and author of The Blueprint, and I'm joined today by the Director of Options Education over at Power Options, Mr. Mike Chuck. Good morning, Mike.
Good morning, Kurt. How are we doing today, sir?
I'm doing well. I'm doing so well I can barely stand it.
That's great.
All right. Hey, listen, today we wanted to go through, and this is with permission, of course, and first names only, but I'd like to go through some recent radioactive traders that have bulletproofed their positions, and these particular radioactive traders actually did so before picking up the blueprint. And using the information that's available on these webinars, actually one of them hired me to do what should I call it?
Coaching.
Coaching,
Mentoring.
yeah, exactly. I took a look at the positions that he was in. One of our fellows was in a place where he already had stock and wanted to make it bulletproof and not have to pay for insurance, right? And the other gentleman plays very volatile, high-flying stocks. When I say high-flying, what I mean is that they can go up like a rocket, but they can also crash. And biotechs in particular. And I was very impressed with his attitude of picking stocks. It was not about being a winner every time. It was about, geez, if I do lose on this, I'm going to lose only a very small amount. But I only need just 6 or 7 of these a year, and it does very well. And this gentleman had mentioned to me here very recently that he's got about 25% winners. Well, that doesn't sound like a very good track record, does it, Mike?
No, I mean, if I went to an advisory newsletter service and they are touting that, hey, we're only right 25% of the time, I might be a little bit concerned. But when you delve deeper into it and say, oh, when you lose, I see you're only losing 5 or 6%, but when you win, you're, winning maybe 25, 24% gains. Now that's a little bit different, isn't it?
It is different, yeah. It doesn't matter how often you're right. It just matters how right you are. So anyway, I thought I would share, without divulging any private information, just share the gist of those trades. And before we got into it, Mike, I thought I would show some slides that we've been showing for a very long period of time. Some of our little vignettes where depending on the audience's needs and where they're at, we would show these little brief mini presentations, okay? And all of it, of course, is to serve the need of teaching folks how to limit risk. And after taking care of that, after taking care of limiting risk, being able to have an unlimited upside, okay? All right, let me find out right now what the composition of our audience is today. We got several dozen attendees from all over the globe, and I'd like to see just what stage you are in your relationship with radioactive trading. Mike, so far it looks like we've got a pretty strong showing for folks that already own the blueprint.
Okay.
Very good. Okay. Mike, I'm gonna encourage everybody to participate in these polls because some of the polls are instructive in nature. Some of them are going to guide Mike and I, and some of them are also going to help you to learn a particular point of trading, and it's all geared to serving whoever's on the line. Okay, so Mike, I'm going to go ahead and close and share the results. We've got 55% are using the free materials and 45% are thinking about buying the blueprint. 35% of our attendees already own the blueprint, and that may have been within the last few months, or it may we may have some veteran owners. I guess we'll probably see when we run another poll, won't we?
Yes.
And 10% have done some or all of the Mastery Series CDs, which we just came out with a new one. And it was kind of a foundational thing for teaching how all the income methods, how we came up with them and how we apply them.
And it
And
really,
what do we call that, Mike? I've forgotten.
it was income methods beginnings, but we really focused on the nuts and bolts of income method numbers 1 and number 2, and showed some
Right.
recent examples where there were positions that were bulletproofed using income method number 1, and where they could be bulletproof by applying income method number 2.
Right, right. And we also showed how to manage income method 5, didn't we?
Mm-hmm.
Using either 1 or 2, so it may seem a little confusing, the jargon and everything. I do list the term that the option is actually called by. When we say income method number 1, of course, we're referring to a covered call. And income method number 5 is a ratio call spread done within the context of a married put to capture more upside. So anyway, Mike, we are on. Can we? Did we hide the results?
You did now, sir.
Oh, okay, very good. Okay, I wanted to see just before we started what kinds of options trading everybody's doing now, because I think the slides that I have up are appropriate. But before I dive into it, I just want to make sure what our audience is experienced with, what they may not be experienced with, and so on. Guys, thanks for this participation. I'm seeing those results just pour in, and it is appreciated. Again, this helps Mike and I, but it's also going to help you, because we like to tailor each one of these presentations and meet the needs of the folks that are on the line. Okay? All right. Mike, I'm going to go ahead and give it 3, 2, 1. Get your vote in if you haven't, and boom. Okay. We've got just a small number of folks that don't like options, and I'm going to say that if you don't like options, there's only really 1 or 2 reasons. Okay, one reason is that you just don't understand them. It's like, well, I'd trade that, but I don't get it,
Mm-hmm.
and that's fine. The second reason why somebody would not like options is perhaps they were taught just enough to get into trouble. And that's what happened with me, Mike. About 11 years ago, I lost my entire life savings playing options, not understanding the positions that I was in, not understanding the risk. And both of those problems are solved by education, and we give a lot of it away free here. Some of the real nuts and bolts and nitty-gritty we do charge for.
Mm-hmm.
But a very large amount of options education that we do here is free and will bring you up to speed to where you'll understand all the jargon, all the things that go with it, and you'll also understand what options were really designed for. Mike, they were designed as a hedge, not as a leverage tool. Isn't that right?
That's exactly right. Yeah, designed as a hedge, used to, be able to have different ways to trade different positions where you're not risking as much potentially.
That's right. Okay, and we're going to be sharing a comparison of hedge strategies here in just a minute. Okay, now Mike, we've got 65% doing covered calls. That's a pretty large contingent there. 69% doing long calls and puts, and 62% doing spread trades. So we've got a pretty sophisticated audience.
Mm-hmm.
But I'd like to do something that that even sophisticated students of options don't always get. Okay, so I'm going to go ahead and hide that. Mike, do you see comparing hedge strategies?
Yes, sir.
Very good. Okay, now this is not aimed as a criticism of covered calls, okay? Essentially what it is it's an eye-opener to show you that there's more than one way to peel an apple, all right? And some of them in particular markets are going to be preferred to others. Covered calls can be good in a very particular market. And the very particular market that I'm talking about, Mike, is a sideways moving volatile market.
Okay.
If it's moving sideways, we're going to not sort winners out of our account, right?
Mm-hmm.
And we're not going to suffer the pain of owning a stock because, after all, a covered call is simply a hedge on a long stock position, right? You own the stock, but then you also short a call against it, okay? But a lot of folks are leaving it. And Mike, here's why. Okay, more and more folks are starting to ask very cogent questions about this. But let's